Duolingo stock is down over 40% in the past month. That's about $137 lost in share value. The company dropped to a 24.44 PE. So let's do some analysis. Let's take a look at the intrinsic value and see if this would be a good investment to add to our portfolios. Now, in Twitter, everyone's going crazy with Duolingo and a few investors that are popular in the Twitter investing space. So I said to myself, let me see if this is Twitter or this is everywhere around the world. So I went on Google Trends, typed in Duolingo to see what was going on. Nothing came up. And then I typed business and finance to see what was trending right now. And as you can see, nothing here is on Duolingo. It's just SoftBank. You also have some, of course, Dogecoin, people that want to get rich very quick, just like myself. You have Fidelity Investments and pre-market, but that's about it. No Duolingo, which is quite surprising to me because as we just saw in the recent earnings, they beat both on the EPS and the revenue as well. So there's no reason for the stock to have dropped. Of course, there was other things that investors didn't like in the investing report, but I figured since this is such a popular stock now on Twitter, it would be all around the world, but that's definitely not the case. And the point that I'm trying to make is, guys, when you see something, it doesn't necessarily mean that it's being talked about a lot. The stock market has trillions of dollars in it. So this is why I always try to do your own due diligence and make your own investing decisions. So let's get right into the stock. Let's take a look at the financials and see how good this would be as an investment. As you can see, both on EPS, on GAAP and normalized, they were beat, and as well as they beat their revenue. Going back to what investors are saying about this stock, as you can see, they have a buy rating of 3.66 out of 5, a total of 24 analysts with 6 strong buys, 6 buys, 11 holds, and 1 strong sell. Now, before we get into the actual intrinsic value, we're going to be taking a look at a couple of cases, the best case, the best case, and the worst case scenario for this stock. Duolingo has been a company that I've been putting my eye on, especially now that they took out chess, which is a game that I enjoyed, and I think it's very good and very well set up in the app. Therefore, it made me try other languages and see how that works, and it was fun. However, I do see Duolingo as much of a game, but not really to help and understand a language. However, I haven't used it enough to completely make a decision. That's just how I've seen it so far. As you can see in the chart, this is the average intrinsic value the stock should be worth, the gray line, and then the red over here is the overvalued price the stock has been over. Now, as you can see, it's considered to be 44% overvalued, but after that, we're going to take a look at the 3 scenarios and see how well this breaks down. Again, guys, if you've been following the channels, you know that I love this, okay? If there was ever a time that I wanted to invest in Duolingo, it was when something like this probably happened. I'm not saying to invest in it right now. I'm just saying this is what's catching my eye. As you can see, we like to invest in divergence. What does this mean? Usually stock price tends to follow stock EPS. As you can see, that was the case when it was negative. The stock was very low. They started making positive EPS. The stock was going down all the way to this point here at the stock price of 520 with EPS of only 2. And now, as you can see, they reported earnings of 7.88, but look where the stock price is. Why is this happening? I don't know, but over here, Duolingo was like a 70, 90, 50 PE, and now it's at a 24 with more EPS. Definitely adding it to my watch list. And I mean, guys, if we take a look at the overall growth of the company, if we take a look at the financials, we can see revenues up 45%, 41%. Net income is up 456%, and the free cash flow, it's up at 89%. Now, just look at this chart for free cash flow, guys, okay? They have a 3-year KGR of 121%, followed by 90% for 5 years, and 38% for 10 years. Just look at this healthy growth. Now, real quick, as always, we want companies that have more assets than liabilities. This is a quick check mark. Over $1.5 billion in assets, only $566 million in liabilities. And if we take a look real quick at the conversion rate of 90%, if you don't know what this is, basically it's the percentage of net income that is converted into free cash flow. This demonstrates how well a company can generate profits from the cash that it has. Of course, I know you're seeing some red right now in the company efficiency, but as you can see, the red is starting to turn into green. It's Christmas time, baby. As you can see right here, the colors are matching. All right, look at this gross margin, 72%. This means the company has a moat. Net margin, 40%. That is absolutely beautiful. Now, this isn't the intrinsic value we're going to be taking a look at, but this is going to be what the analysts are forecasting for this company. As you can see, the lowest forecast for Duolingo means it still has a 25% upside, the stock being worth about $241, followed by $433, followed by the highest forecast of $630. Now, Duolingo currently does not pay dividends or have a buyback yield program, which is something I don't like. Usually I like to see companies when they drop for their company to be buying back its own shares. Of course, this only happened this week, so let's see if in the coming weeks or months they do take out a program, meaning that they believe more in the company and they're going to be buying back a portion of the company because they believe the stock is cheap right now. If we take a look at another quick metric, we're going to be comparing the revenue to the total debt to the PE ratio of Duolingo. Revenue being the blue line, as you can see, has been steady increasing. Total debt being this green line right here, as you can see, it's almost maintained the same. It's increased a little bit. They are investing in infrastructure. They are investing in R&D, expenses just to grow more and know how to sell more to their customer base and grow their customer base. But one key thing right here is if we take a look at the PE ratio, obviously this would have been the point to buy when the PE was negative 220, but we're not, we don't have a crystal ball back in 2023. However, now the PE ratio is dropping. This needs to get updated. The PE ratio is way below this. It has to be updated to the November 2025, but you can see the point is going to go even lower now with the revenue as we saw increasing as well. Now, on the stock price is not by any means saying that the company is not going to grow. As you can see, the sector median compared to the company growth, you can see the revenue over 39%. Everything else is pretty much over the 50% mark. So this is a growth machine. So now what you've all been waiting for, let's go ahead and take a look at the intrinsic value of Duolingo. As you can see, the base case, this company is still overvalued by 44%, meaning the stock is actually worth $107. The worst case, the stock is worth $75 with 91 cents. And the best case being the company still overvalued by 8%, meaning the stock could be worth $177. Now, keep in mind, those are just estimates and a formula to determine a stock. There's different things, different metrics and ratios that are going to determine the true stock price. The intrinsic value always gives you a good idea, but definitely Duolingo is on my watch list. I'm eager to know in the comments below, what side of Duolingo are you on? Are you on the investor side, or you completely hate this stock and you think it's just AI is going to completely destroy it, because that is the talk right now in the market? I would love to know in the comments below. If you enjoyed the video, please consider leaving a like. Don't forget to subscribe. And as always, I'll see you on the next video.